All right, so we are welcome once again. Let us make progress with our study, and we are going deeper and further into technical analysis. And what we have here to check next is market structure. So let us not waste time. What is market structure in Forex? Market structure in Forex trading is a combination of the market logistics, current states, and rules. It's a way to understand the markets and make better trading decisions. So just the way they've said it, that is what it means. However, I think to just make it simpler, we can just conclude that market structure is the nature, the characteristic of the markets. So market structure is that thing that every trader understands. And a result of that understanding, people can now say that, oh, Bitcoin should buy, or GBP USD should sell, or Apple stock will buy. Do you get the idea? So market structure is what you get to understand and know, because that's the nature, that's the characteristics of the market. So take, for example, to drive the lesson home, no matter how light-skinned the Oyinbo or foreigner is, if the person comes to Nigeria, one thing is certain, the person will turn the person does not have to turn black as it were, but we can tell that the person's skin, is going to get tanned. The person's skin is going to develop some melanin, and then the person will become darker as it were. And on the flip side too, if anybody should relocate, to the UK now, you could almost tell that one of the things that is predictable to happen is that the person will get chubbier, the person will get much more light-skinned. Why is it so? Because that is the nature of the weather over there. And here, that is the nature of the weather over here. So, long story short, meaning that there is something we can know based on what is in the weather here and in the weather there, that whoever is relocating to either side, you can almost predict that this is what is going to happen. Doesn't mean that people coming to Nigeria means that their life is receiving a judgment. No, what we just mean is that the sun in Nigeria or in Africa, as it were, is more harsh, if I can put it that way, than the one we have over there. So I'm saying that market structure is also that thing you can understand about the markets that can then help you predict an outcome of the markets. So let us not waste time as we get into it. So when it comes to market structure, market nature, market characteristic, there are usually three nature of the market, which is what we have as the uptrend. Oops, sorry. We have the uptrend, good. We have the downtrend, and then we have the consolidating market. You can see it there on the curriculum, and I'm so sure that you must have seen this on Baby Peeps too already. None of it is strange to you. None of these things are strange to you, as it were. So we have the uptrend, we have the downtrend, and then we have the consolidating markets. What does uptrend mean? Remember in the lesson on candlesticks, I made mention of trend here, that the trend is your friend. That I'm also sure that this is one of the things you must have seen, on Baby Peeps and, maybe online on YouTube or something. So what is the trend? The trend, simply put, is the direction of the markets. That's the simplest definition of it. The trend in Forex markets is the direction of the markets. Remember when we were talking about candlestick, I said there are higher time frames and lower time frame. And I said that higher time frame is where you go to when you want to know the overall direction of the markets, right? Good. So that direction is the structure. Are we together? Now, when it comes to structure, we have three structures in the markets or three market characteristics: uptrend, downtrend, and then consolidation or choppy markets. Uptrend, what does it mean? Just like the word implies, it means that over a period of time, it is observed that the market is moving higher. And downtrend, it is also observed that over a period of time, the market is moving lower or coming down. So for uptrend, it is going up, increasing, buying. For downtrend, it is coming down, decreasing, or selling. And just as we name a candlestick that is going up a bullish candle, is the same way we can name a trend that is going up a bullish trend. And then the same way we named a candlestick that is coming down a bearish candlestick is the same way we can name a trend that is coming down a bearish trend. So that is to say, an uptrend also equals bullish trend. Like that's another name for it. And then a downtrend is also called a bearish trend. It's as simple as that. Why a consolidation market remains consolidation. So let us go further and go deeper. Let us pick this market nature one by one, and then let us talk about them. So let us start with uptrend. Uptrend, like I said, means that over a period of time, it could be on the 4 hour, it could be on the daily, but long story short, it means that when we look at the market from a scope, we can tell that over that period of time, the market was observed to be moving up. Over a period of time, the market was what? Observed to be doing what? To be moving up. That's an uptrend. Now, remember I said that the market has characteristics. For every uptrend, there are things you would see that would let you easily conclude that, okay, from this thing that we are seeing, although the market is doing zigzag, but the market is actually in an uptrend. What I'm trying to say is that let's take a look at GU, for example. This is GU. Okay, let me bring in a fresh chart of another GU. Good. Can you see this? That if you zoom out, ah, I'm concerned about something. I'm concerned about something. Okay, let's just continue. When you come to GU over here and you zoom out, although the market is moving in a zigzag manner, when you pick your observation from here, this top right here, what can you observe about the markets? We can say that the market has been moving towards one direction, which is what? To the downside. Because this is where the market is currently, where these prices, there is a line that used to be there, but as for me, I removed the line. But for the sake of this lesson, let me just put um good. Let me just put one line there. Good. So that line that you can see right now on my chart, that is where the market is currently. I hope I'm making sense to us. So meaning that the market started moving from this top because the market always moves from the left to the right. Meaning that by the time we come to this same chart, let's say 6 months from now, this market would have advanced further into the future towards the right. Excuse me. So the market is always moving from the left to the right. Is it making sense? Awesome. So let's make progress. So what I'm trying to say is that when we look at the movement of this market from this high, where we have that horizontal line, this red one, up to this point where we have the market at the moment, you can see that although the market has been moving in a zigzag manner, but we can see that there's an overall direction, which is what it has been going down. So we can easily conclude that GBP USD has been what? Has been on a downtrend. We are just using this as an example. But don't forget that we started talking from uptrend. Now let us look for another asset. Let's take USD JPY, for example. Amazing. Amazing. So when we look at USD JPY from somewhere like this point, and into the future, you can also tell that although the market has not been moving in a straight line, but overall, we can see that the market has been moving towards where? Towards the upside. So this is what an uptrend. Remember what we defined a trend as the direction of the market over time, over a period of time. That period of time can be monthly, daily, on the 4 hours. So this is the 4-hour chart. And we can tell that from this day, what date is this? From September 16, 2024, up until today, which is January what? January 8th. Although USD JPY has been moving in a zigzag manner, but the direction has been towards where? Towards the upside. While also, if you then look at it to the left, you will then also observe that from what date is this? Let's put this here. From July 3rd, can you see now? From July 3rd till Monday, 16th of September, USD JPY has also been what? On a downtrend. So you can see, one thing I just need you to understand about the nature of the markets is that even when we make analysis that an asset wants to go up, take Bitcoin, for example, one of the most popular crypto assets that is out there is Bitcoin. And one assumption or one desire that everyone has in mind is that Bitcoin is always doing what? Bitcoin is always what? Moving to the upside. One of the things we can clearly tell about the nature of the market is that although the market is going to the upside, the market will never, that's the nature of the market. Why is it that way? Don't let's stress ourselves with that now. Let's just come to the acceptance and understanding of it, that the market will never move in a straight line, as it must have been established for you on baby pips. So that is why we say that over a period of time. So over a period of time, USD JPY has been what? Moving to the upside. And over a period of time, we can also saw that there was a time it was moving to the downside. The next thing that we now have to understand now is that since it is not moving to the upside in a straight line, and it is not coming down in a straight line, how do we then trade the market? That is when we go further into it, and then we say that every market condition has its own characteristics. As you must have seen once again on baby pips, which is that every uptrend is characterized by what we call higher lows and higher highs. And then every downtrend is characterized by what we call lower lows and then lower highs. Let me write that down for us. Okay, let's do this way. So just for the sake of writing, every uptrend is characterized by series of higher highs and higher lows. While downtrend is characterized by a series of what? Lower lows and lower highs. So what that simply means is that the market is always moving in a sequence. It goes up, comes back a bit, goes up again, comes back a bit, and then goes up again. Now, let me differentiate the difference between all those English or those plenty grammar. Let's assume that this is a fresh chart. This is one of the things I've taught my students, which you also find in a video that I'll be adding to all these courses in the future. Is that let's assume that this. All right. My network messed up. So let's make progress. Okay. So in an uptrend, this is called, okay, I wanted to show us something before we now begin to talk about higher highs and higher lows. But just take note of what I said, that when the market is in an uptrend, what we will be seeing is series of higher highs and higher lows. And then when the market is in a downtrend, what we will be seeing. This is network messing things up for us, guys. All right, let's make progress, please. So before we begin to talk about higher highs and higher lows, let's assume that this is a fresh market. Take, for example, Bitcoin was giving birth to in 2013. So let's say that they just gave birth to a new asset too, and the asset has moved from this pricing level to this pricing level. Chineke.